All right, so first question here is, how are the Bitcoin ETFs going? Just give us the lay of the land. We are just over 60 days in, like a few more than that. How's it going so far?
I'll start and Rasmussen can jump in. This launch has exceeded everyone's expectations, right? For context, I spent 15 years in the ETF industry before I moved into crypto full-time 6.5 years ago. These are the largest ETF launches ever by a significant factor. To put it in context, before these ETFs, the fastest growing ETF for 1 year inflows, in other words, how much people invested in the first year, were the NASDAQ 100 Qs, QQQ, and those pulled in $5 billion in a year. And if you take these new Bitcoin ETFs, even after you subtract the outflows from GBTC, they've pulled in $12 billion in 2 months. So by far and away, the fastest growing ETFs of all time. I was very optimistic. I spent 3 years with the team at Bitwise, or 5 years, trying to get one of these launched. And I didn't expect anything like this. We're at 2 billion. The ecosystems, pulled in 12. It's just been outrageously great. And I think it will accelerate in the future. So after maybe a few weeks, a few months, maybe a month or so now, where it may be a little bit quiet, I think there's a second acceleration coming that may even dwarf this first one. So it's good time in ETF land.
Well, if you think these first 2 months of the Bitcoin ETFs have been quiet, I can't wait to see what a future acceleration looks like, because it doesn't look like it's been quiet from my perspective. It seems like it's been quite loud. I want to ask just about how the success of these Bitcoin ETFs has characterized the industry from the outside perspective. So there were two potential worlds going into the approval of the Bitcoin ETF. There was the flop, and then there was the massive success. And we are in the universe in which we got the massive success. How has that changed the PR, the optics, the position of the crypto industry to the perspective of the outsiders?
I'll go ahead and take this one. I think that this has been a massive boon for the industry. I think you hear a lot of stories from whether it's grandparents or aunts or uncles or parents or siblings who now with these Bitcoin ETFs look at that as a stamp of approval from not only the government, but just the mainstream America. You have these big investors going on CNBC, Larry Fink, and others that are really well known talking about Bitcoin as an asset class rather than a speculative vehicle or something that like vaporware that's going to, go away in a few years. And I think that just shows what these ETFs have done in a very short amount of time. In 2 months, we've gone from crypto's a scam to, this is a legitimate asset class that could overtake other commodities at some point like gold. And so that just kind of shows where we're at. And I know the conversations that I'm having on the road with our sales team at conferences with advisors are way different today than they were 1 year ago or 2 years ago. And without the ETFs, we wouldn't be in the situation that we're in. So it's been a huge boost for the asset class.
Matt, you called this an overwhelming success. Was Wall Street surprised by this?
I think Wall Street was surprised. I think people thought it would be a success, right? We knew there was demand, but the scale of the success and the broad-based nature of it, I think, has exceeded expectations. And I think it gets to something that Ryan mentioned, which is what really changed from traditional finance's view is they now accept that Bitcoin is going to be here forever. Once we have these ETFs, once BlackRock and Invesco and these giant names are in there, once RAs, investment advisors, institutions are piling in, they've accepted that Bitcoin won't go away. So I think, we knew it was going to be a success, but the scale is just off the charts.
You mentioned, Matt, this second acceleration. All right. So we've seen the first acceleration that got us to 12 billion. And the second acceleration, can you describe what that actually is? Why would we be getting a second acceleration? If you're looking at this from the outside, you might say, well, the first wave, everyone who wanted to buy, they probably already bought. And certainly now the Bitcoin ETF is hyped enough. We're squarely in a bull cycle. So why would there be any second acceleration?
Yeah, great question. I can start it and Ryan can finish. The thing about ETFs approval is it unlocks only a portion of the market. So the day an ETF is approved by the SEC, retail investors can buy it, and independent financial advisors, people who manage money on behalf of other people, can buy it. But there's a whole class of investors who still can't buy it. So the largest wealth management platforms in the US are firms like Morgan Stanley, Merrill Lynch, UBS, Wells Fargo. These have tens of thousands of advisors and trillions of dollars of assets. and they can't buy it on those platforms until they complete their own due diligence. So it's not good enough that the SEC approved it. Each of those platforms has a due diligence process, and they have to approve the ETF as well. And that process hasn't happened yet. That will probably start to happen in the next few weeks or the next few months. I would say that maybe 30% of the wealth market in the US can now access these ETFs, but there's a whole additional 70% that's going to come online, not all at once, not like the ETF launch. This will be a series of individual approvals at each of these firms and each of these sort of tiers of wealth until we get to the final opening. I'll make an analogy that maybe makes sense to people. The closest analogy to the Bitcoin ETF launch was the gold ETF launch. And the gold ETF launch was a very big deal, and suddenly people could buy gold, but inflows built over 7 years, right before they reached a local maximum. And actually the largest year was year 16. So what we've seen now is retail investors and independent advisors buy these ETFs, hedge funds, venture capital funds. Great, huge success. But there's this whole other level that we're about to get to in the next month or 2 months or 3 months that's really where the trillions of dollars
and that is that, Matt,
lies.
Is that what we're seeing when we see like Morgan Stanley has kind of opened the gates to the Bitcoin, Wells Fargo has opened the gates to the Bitcoin ETF? I like all of these gates. I didn't even know these things existed, but is that basically the process of this second acceleration here?
That's exactly right. Yeah, it's like a nuclear key, right? You need the SEC to turn it, and then you need Morgan Stanley to turn it. And we're just going through that process of the second key turning.
I would give one additional data point here. So I spent 8 years before I joined Bitwise working at a company called Cetera Financial Group. This is a large network of independent financial advisors. They have 10,000 advisors or more. They manage $300 billion in assets. And they just recently approved Bitcoin ETFs on their platform for those 10,000 plus advisors to start allocating on behalf of their clients. And that took 2 months. And like I said, I've been in that organization before, and organizations like that. And the wheels just move very slowly. There's so many executives and teams involved in reviewing what is Bitcoin. Are we okay with our advisors allocating to it? How do we feel about them getting exposure on behalf of clients? Then once they make that decision, they have to evaluate the different vehicles. They have to decide how they're going to educate the advisors on what Bitcoin is and what it means to put Bitcoin in a portfolio. A lot of time, those advisors have to educate their clients before they actually make that investment. And so there's all these different hurdles that you have to clear before you actually make the allocation. It isn't just the platform approval. There's a whole education process that happens after that. And I think, on the retail side, we move a lot quicker because we're self-directing our own investments. When you have someone managing money on behalf of another, there's a lot more hoops you have to jump through to make sure you're complying with all of the regulatory requirements and whatnot. And so I think that's partly what takes so long.
Yeah, this is certainly probably things that are moving on timeframes that crypto natives, the crypto industry doesn't really consider because we are so short-term focused in this industry. But really the Bitcoin ETFs and generally ETFs broadly are just like a fine wine kind of thing. Like you got to let them age before they really mature. Matt, I just want to try and get some more numbers on this thing. You said 30 and 70% in terms of like 30% of capital is available, and just want to make sure that I'm understanding that correctly. When in terms of the acceleration that you were referencing, the 70% is like total available like pools of capital, as in like the 30% is the available and interested capital, and that acceleration that you're talking about is like there's roughly 70% more capital available to buy the Bitcoin ETF as the BTC ETF ages. Can you just shed a little bit more light on that?
Yeah, I mean that's a back of the envelope calculation, but that's about right. If you look at the U.S. wealth management industry, people have different measures of how big it is, but let's call it 40 to 50 trillion dollars, somewhere in that zone. Yeah, I think about 30% of that can access these ETFs today, which is great. Like that's trillions of dollars that can access these ETFs, and it's turned into billions of dollars of flows. And those flows are just getting started. But there is this whole other group that haven't even crossed the chasm into being able to access that. It's certainly the larger contingent. So the majority of wealth, whether it's 60 or 70% of the wealth that's still waiting, and they're doing their due diligence. They're actually moving faster on these Bitcoin ETFs than they do on most ETFs. Usually this would be a 6-month or year-long process, and it's going to be a quarter-long process or a 4-month-long process. So it's great. But as you said, that's sort of glacial from a crypto perspective. But they will get there. The progress is happening. They're going to approve them, and we'll start to feel those flows build over months and quarters and years.
I will say one of my favorite parts of this whole story, the whole crypto story and what's happening with Wall Street sort of discovering crypto, is something we say at the beginning of every single Bankless podcast. This is an opportunity to front run the opportunity, right? And this is like, Bankless listeners will know we are fans of the crypto natives, the believers, kind of the underdogs, like retail over institutions wherever possible. And retail has had a solid decade to front run Bitcoin price appreciation. And even now, there's still time for retail in their 401ks, for instance, their IRAs, to get ahead of that 70% that still has no access to capital. And I'll juxtapose this with basically almost all 99% of the opportunities that you sort of see for investment opportunities where institutions have an edge. If a company is going to IPO, first of all the VCs get in first, and you have to be an accredited investor and all of that rigmarole. And then, the banks that are issuing the stock, they get their cut ahead of time too. They get preference, and by the time the thing is IPO'd, right, it's like all of the juice has been squeezed out of it on the institutional side. And what's retail left with just like Facebook stock that's already done its 10,000x appreciation, and you just get a measly 5 to 10x after that. And just like, thank you very much. Crypto is the exact opposite of that. And that is one of the things I've been most excited about for every single moment of joining. Retail, the small guy gets first dibs on this, the believer, the person who's using it, and then institutions are left to kind of like, come buy our bags. I'm sure you wouldn't phrase it like that, Matt.
No, but I think that's exactly right. I mean, this is an empowering technology, and institutional capital has so many sort of behavioral biases against it, inherently anti-tech, inherently disruptive, difficulty getting their heads around digital things. This was one of the few places where retail had advantages and has taken advantage of it. And kudos to them. Like, kudos to everyone who was early and has been in this for years through bull and bear markets. Kudos to everyone, as you mentioned, still getting in now, because it's not the end. It may be the end of the beginning, but we're not quite there yet. There still is a little bit of time, even on Bitcoin, much less on ETH, which I'm sure we'll get to. But yeah, I love that about crypto as well. It's really a beautiful thing. It warms my heart.
If you enjoyed all of that, then you'll absolutely love the Bankless newsletter. Join over 300,000 fellow readers, all for free. Click below to sign up.